Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Kilroy Realty Corp. Quarterly Report. Kilroy is a leading U.S. landlord and developer providing various businesses and services across multiple locations. The company's portfolio includes office space development and management life science projects and redevelopment mixed-use project development residential units in Hollywood and San Diego, approximately 1,000 units. Tenant improvement services for office and life science spaces, Real Estate Investment Trust, REIT, services property management and leasing services. These services are provided across 5 major locations: San Diego, Los Angeles, the San Francisco Bay Area, Seattle, and Austin. Kilroy Realty Corp stock price increase. A year of positive developments over the past year. Kilroy Realty Corp stock price has experienced a modest increase, reaching a 52-week high of $45.03 and a low of $27.07. Several key events have contributed to this positive trend. In October 2025, the company reported strong third-quarter earnings, surpassing analyst expectations for funds from operations, FFO, and revenue. This led to a significant increase in stock price on October 28, 2025. Additionally, Jefferies upgraded its rating for Kilroy Realty from hold to buy in October 2025, further boosting investor confidence. The company's strategic acquisition of Maple Plaza and leasing activity at Kilroy Oyster Point Phase 2 have also contributed to the positive trend. Furthermore, Kilroy Realty updated its full-year 2025 FFO guidance, reflecting an optimistic outlook and increasing expectations for the company's performance. While no single event directly caused a stock price increase of a little over 6.95% in a single day, these collective developments have collectively contributed to the positive trend in Kilroy Realty Corp's stock performance over the past year. The primary drivers of revenue growth or decline in a given financial summary are multifaceted. On the one hand, revenue decline is primarily driven by rental income decreases due to lease expirations and rent abatements, as well as straight-line rent decreases. Additionally, amortization of deferred revenue and tenant-funded improvements decrease also contribute to revenue decline. On the other hand, revenue growth is driven by acquisitions of new properties, tenant-funded tenant improvements, leasing costs, and an increase in revenue associated with tenant creditworthiness considerations. Furthermore, increases in revenues from transient parking and residential income also contribute to revenue growth. Interestingly, occupancy rates have remained relatively stable, making them a neutral factor in driving revenue growth or decline. Lease expirations and renewals have had a mixed impact on revenue, further highlighting the complexity of factors influencing revenue growth or decline. Net income and profit margins. A shift in favor of Kilroy Realty Corporation. Kilroy Realty Corporation's net income has experienced a significant increase, with an 8.1% rise in Q3 2025 compared to the same period in 2024. This upward trend is also reflected in its LP counterpart, which saw an 8.6% boost during the same quarter. The company's overall net income available to common stockholders has increased by a substantial 74%, from $151,999 in 2024 to $264,167 in 2025. The profit margins have also shown improvement, with operating income margin rising to 34.2% in Q3 2025, up from 32.1% in the previous year. Net income margin has followed suit, increasing to 23.4% in Q3 2025 compared to 21.9% in Q3 2024. The reasons behind this positive shift can be attributed to several factors. The increase in rental income and gains on sales of depreciable operating properties have contributed significantly to the company's growth. Additionally, a decrease in interest expense has helped to boost net income. However, it is worth noting that certain expenses such as property and related expenses due to decreased real estate taxes have increased. Overall, Kilroy Realty Corporation's financial performance has shown a marked improvement, with both net income and profit margins experiencing significant increases. This upward trend is expected to continue, driven by the company's diversified revenue streams and strategic investments in its portfolio. The company's financial performance indicates a significant improvement in its ability to generate positive operating cash flow. The data from the consolidated statements of cash flows reveals that net cash provided by operating activities increased from $1,101,000 $1,219 in 2024 to $1,234,119 in 2025. This increase signifies a notable growth in the company's capacity to produce cash from its core operations, suggesting a strong financial foundation for future growth and development. The company's financial summary reveals significant changes in its debt level and interest expenses. Notably, total debt has increased from $3,999,566 to $5,306,344, primarily driven by the issuance of new unsecured senior notes. In contrast, interest expenses have decreased slightly, with a reduction of 11.7% from $36,408 to $32,152. This trend suggests that while the company's debt level has increased, its interest expenses have not kept pace, indicating some cost savings in this area. Management is optimistic about the company's outlook and strategy. They aim to drive growth through sustainability and innovation, combining reports for a unified view of the business. The company plans to recycle capital by disposing of non-core properties and acquiring new ones, focusing on knowledge-based industries. Key strategies include growing net operating income, NOI, and funds from operations, FFO, pursuing development, redevelopment, and acquisition opportunities, maintaining a conservative balance sheet with financial flexibility, continuing regular quarterly cash distributions to shareholders. Management expects to spend $50–100 million on development projects in 2025, focusing on growth opportunities in knowledge-based markets. They believe they have adequate liquidity for the next 12 months and will evaluate capital markets for opportunities to raise capital. Overall, management is committed to driving creativity, productivity, and long-term value creation for shareholders. The company has made several significant acquisitions and divestitures in recent years. In terms of acquisitions, the company has purchased one building with 306,366 rentable square feet, as well as properties or portfolios of properties. Additionally, the company acquired one operating property with one building for $205.3 million. On the other hand, the company has also made several divestitures. Specifically, it sold 5 buildings with a total of 741,969 rentable square feet, and 2 operating properties with 5 buildings to unaffiliated third parties for $405 million. The company has a history of paying out dividends to its shareholders. In 2025, it paid a total of $64,996 in dividends. This is evident from multiple sections of the financial summary, including pages 30 and 57, which specifically mention dividends paid. Additionally, page 58 notes that the company paid a regular quarterly cash dividend of $0.54 per share on September 16, 2025. Concerns over inventory buildup and supply chain disruption. The current market is plagued with concerns over inventory buildup and supply chain disruption. In the real estate industry, reduced demand for office space due to remote working and flexible arrangements has led to defaults on leases by tenants. Furthermore, delays in obtaining necessary permits and authorizations have added to the woes of the sector. These issues highlight the need for a more agile and responsive supply chain that can adapt to changing market conditions. That concludes the financial summary for Kilroy Realty Corp. Feel free to comment below, and I will be happy to answer them when possible.